Good evening, guys. This is Henry Gamble with simpleroptions.com, and in tonight's video I'd like to take a look at Wynn. So Wynn reports earnings tomorrow before the open. So anytime you have an options position that you would like to take on a company that reports prior to the open, you have to establish your position the afternoon prior to it. I like waiting until the afternoon, that way you can get a better idea of where the closing price is going to be and therefore get a better feel for what the expected move is going to be in relation to those moves. During a lot of these free videos, I've been talking about a lot of the things that I look for earnings, and this will pretty much follow that same set of rules. So as I start off, I like to look at a couple of things. First off, I like to see what the company has done during previous earnings reports. If you come back and check on the weekly chart, it's a little easier to identify here in Thinkorswim. It easily labels the previous earnings dates. You can see what their estimated report was and what the actual report ended up being. So I will reference typically about the 3 previous reports, and we can see that as a general rule, Wynn has done a pretty good job of meeting or exceeding their expectations. Then I also like to see what the trend is. Now there's 2 ways I'll look at this. Off the daily chart, the trend is mixed, because you can see how the 200-day moving average is held, but the 100-day moving average is still acting as resistance. So you've got a little bit of divergences there, though you have clawed your way back up above the 21 today, with that close being well above that level. If you look at this on the weekly chart, I like to define the trend as, on a basic level, patterns of higher highs and higher lows, and then I also like to look at how it's acting on the relationship to the 10 and 34 moving averages. So you can see how that weekly squeeze tried to fire short. It essentially took it down into that area of support with the C wave above 0. These are all things that tell me I want to actually look at that as being a level of support to bounce off of, and with the decent earnings they've been reporting, look for bullish positions. So I take all of that, and then I'll come back in and hide these studies so I can get a little bit cleaner feel for the way price action looks. I mainly will take the most recent swing, measure that from the high to the low, to give myself a bullish expectation or a target for the trade. Now, as mentioned in the chat room this afternoon, well, the company can come out with good reports and then it could still fall after the announcement, and that is absolutely true. That's why you approach these trades first from a risk perspective. You never want to risk more than you could stand losing the max on, because if we wake up tomorrow and Wynn's trading down at 180, well, obviously that would go completely against the analysis that we've had, but that can happen. You'll remember SanDisk that had pretty good earnings, but the stock still tumbled after the report. So all you're doing is taking as much information as you can get and trying to make educated decisions off of that. Now, what we're looking at here is we can see that from the previous swing high to swing low, you've got a 1272 extension that lands you at 217. Just for the sake of easy math, let's say that the stock was trading right near 210, and the expected move on this was $7.80. So essentially that lands us where if we think we're going to get the expected move, it's going to be kind of right here in this area. So based off that, we pull up the option chain and see which of these strikes looks attractive to sell, because if we don't think that's going to exceed those prices, that's where we like to start looking to set up the short calls. So I looked at this and said, wow, the 217 still carry a great premium. That's a big thing with a butterfly too, that if you're going to be establishing one, you want to make sure that you're selling the body strike and taking in a decent credit. If that body strike is only trading for 10 or 15 cents, it probably isn't worth it. But we basically set this up to where those short calls are in alignment with the extension, roughly in alignment with the expected move. Then we look at breaking the wings. The reason why I like trying to break the wings in these setups is because if that weekly squeeze really gets moving and it uses the earnings report as that catalyst, I want to be able to have a spread set up where no matter what prices are to the bullish side, I'll still be able to make money. If it reports to the downside, then I will lose the debit paid for those contracts. That's where you define the risk by the number that you take. My optimum place would be right there at 217, where if we can pin at the extension, that'd be a perfect place to make the most potential profit. And then of course breaking the wing is done by buying a deeper in the money call here, buying one closer here on the opposing side that you've sold. That's what sets that up where if the underlying rally is above 220, it will continue to make money for you. And those are just some of the ideas behind setting up those trades. Now, Wynn doesn't actually report until tomorrow morning. By that time, it will be too late to take this trade. So even if the stock opens up at 217, you do not want to take this trade, because implied volatility will already have come back down to a bit more of a normal value. The move will be over, and that's kind of the way these work. But the next time you have something that's setting up like this and you see that weekly squeeze pattern, it'll at least give you some ideas on how you can play that. So I hope it helps, and we'll see you guys at the next free video. One other thing I wanted to make you guys aware of is that tomorrow, Tuesday, July 29th, we will be having a weekly credit spreads class with Bruce. So those of you that are familiar with his strategies, you'll know that they do vary a little bit from some of the things that John teaches. Generally speaking, they're a little more conservative and geared more towards the income trader. A couple of things that he will be covering is a step-by-step formula for setting up weekly credit spreads the right way. Another thing we've had a lot of continuing questions on are specific adjustment techniques that will get you out of a jam and make you even more money. So there's a lot of things that go along to how you want to get into trades like that and the specific ways you want to adjust them. And then of course where the rubber really meets the road is real live trade examples. So Bruce has been an awesome asset to my trading. I think those of you that have kind of seen his strategies and the way he works, everyone has been a pretty big fan of that stuff. So if you like it, I think you will get a good benefit out of that course. That's going to be tomorrow, Tuesday, July 29th. The price for that course is $97. The other thing that's great about these is getting the online access to the recording. So even if you're busy tomorrow night and you can't make the actual broadcast, when you get to your computer tomorrow or Wednesday morning, you will have an online version of that that's ready to go. So you don't have to wait on the recording, it'll be ready for you, and that's a great feature for those of you that may not be able to attend tomorrow night. So that's the long and short of it. I hope to see you guys there.